We're just over 2 hours into trading. It is Wednesday, August 25th. Hello, traders. Let's take a look at yesterday's pick. Let's take a look at the market. Let's find something that we like for today. Yesterday, UPST was my pick of the day. You can see this beautiful daily chart. Stock is continuing to push higher. A doji here today would mean that the stock was able to hold all of these gains from yesterday, and it would be a sign that there's a good chance for the stock to continue to push higher tomorrow or Friday. So I do like that stock. I still think that it works. Going to the M5 chart, you can see video came out somewhere in here yesterday. So the stock is a little bit higher than that. It's had some upward movement. I'd like to see better. This is a 5-minute chart of the S&P 500. I'd like to see better price action today with the market doing this. But hey, look at the gains from yesterday. Okay, stocks don't go straight up or straight down. It's going to take time. It's got to consolidate these gains. If it's able to just tread water and hold these gains here, I'm happy with that. And I think it has the next leg higher. There's a JPM above a trend line. There was the trend line breach that I had earlier. Actually, it was right across here, new high of the day, which let's go to the market, but banks are going to be my pick of the day. I do like the price action that I'm seeing there. S&P, this is not what I would consider a high quality rally. If you draw an upward sloping trend line here, you can see it. I'm going to ignore some of these tails here, but that is where you get the most touches. When you draw a trend line, it should have as many touches as possible. So let's draw it, and I'll show you why that is of interest to me. Take that line there, take that line there. You can see how we've got probably the most touches right in through here. That's your lower trend line right there. This, if it's breached, would set up a good short, but I believe we're getting close to a buying climax here today. Why? Because this is not a high quality rally. You can see fits and starts. So market rallies, it pulls back. It rallies, it pulls back. It rallies, it pulls back. So all along the way, it's checking the bid. The fact that it was able to break out above yesterday's high, that's certainly a good sign. But I believe that we are going to see a bit of a pullback today, and I believe that we'll finish close to yesterday's high. So right in that right in the 446.50 level, excuse me, 448.50 level. That would be my guess. Right in here is where we close for the day. So if you see a new high of the day, long green candle like this, and then bam, long red candle, an engulfing candle that consumes the prior candle, that's a warning sign that the highs are in. You could get two back-to-back consecutive red candles that take out the open. That would also be a sign that you have the high of the day in. And when you get a breach of the upward sloping trend line like this, that typically results in a couple of long green candles. One of them will be red, one of them will reverse that big green candle that poked through, and that's when you can start to see some selling. We have one OP indicator spiking, so we'll be looking for a bearish cross up in here. That will be our first sign to take profits on long positions during the course of the day. And then you don't need to bail on your long positions. If the stocks are ticking higher, let them run. Just know that you need to have your sell orders loaded and that you need to be ready to pull the plug. You should also have orders layered above the current price so that as the market rallies, as the stock rallies, you're starting to scale out of the position and take profits. That's how you should be trading right now. If we go into the daily chart, you can see that typically what has happened on these drops and snapback rallies is that as soon as we get back to the high, we poke through it, and then we gradually drift higher. Tiny little candles in here like this. And then boom, you get your next drop. Now here we go again. Tiny candles. In this particular case, we did get a little bit of volatility both ways, but that has been the pattern. Breakout to a new relative high. This is from much lower levels. Earlier in the year when we still had a lot of good news coming out, earnings season, economic rebound, so forth, so on. But once you start to get these tiny little light volume candles, you know that you're vulnerable to that pullback. So this is what I'm looking for the next week to 2 weeks. We've got Labor Day holiday coming up. We are in a news vacuum. Not a lot of news. We got GDP coming out tomorrow. Not a big mover because this is the second release of that number. We also had durable goods orders today, not a big market mover, a little bit better than feared. There's not anything to drive the market. Earnings season is over. So look for the market to have tight ranges, low volume, gradual drift higher, and pretty tight intraday ranges. So what are we going to do with that information? Well, JPM is a stock that I like, and that could be my pick of the day. I'm going to go into Pop Bull, and I'm going to be looking at these stocks right here, and I'm going to go right to BAC. I like it better than JPM for this reason. You can see downward sloping trend line, breach to the upside, bounces off the 50 through the 100-day moving average. Nice little cup and handle formation here through that resistance point. I think BAC could challenge the high. And so in Jackson Hole, we've got that conference happening virtually. And I believe that traders are probably looking for the Fed to start talking a little bit about tapering and the timeline for tapering. That will put upward pressure on interest rates. That is good for banks. Let's take a look at TLT. Typically, as bank stocks rally, TLT will be pulling back. When TLT pulls back, that means the interest rates are on the rise. Higher interest rates, not necessarily good for the market, so you probably are going to start seeing some softness in tech stocks if this continues. So let's do this. Let's start drawing some GTC trend lines. TLT is important for us to watch. We'll draw a trend line right here using that point right there. So now I have a GTC upward sloping trend line. If this upward sloping trend line is violated, that 200-day moving average is almost going to be a sure bet. We also have a downward sloping trend line, so let's draw that. Click here, and then we'll return to the major topic today, which is bonds down. That means interest rates are higher. When interest rates are higher, banks do well. That's why we're seeing strength in bank stocks today. BAC, I like it. So wait for dips. You don't need to rush in and buy this. And let's take a look at the stock price action. You can see runs up, then it consolidates. Oh, there we go. Nice little move, and then it consolidates. So if we get that buying climax in the market today, and you see a nice pullback to that trend line, that's when you would want to enter a stock like BAC, provided that it maintains its relative strength. So I'm going to put up the 10 SI indicator that helps us identify relative strength, orange line above zero. So when you get that market pullback in here, you want to see the stock preserve its relative strength. Any little dip in there will give you your opportunity to enter that on the notion that the market will finish higher for the day. So I like BAC. I think it works well today. I think it works well tomorrow. Overall, keep your swing trades to a minimum. We know that the meat of the move, this rebound here, has already taken place. We know that from prior dips, what to expect in here. So tight ranges, low volume, the chance for those gains to be stripped away at a moment's notice on big down red days like that. So tread very cautiously with your swing trades. Good day trading environment. BAC is your pick of the day. I'm going to discuss one other clue that I see in the market right now that tells me that the upward momentum is tired. And I'm going to go into some of my searches here. I'm going to go into my heavy buying search, for instance, and we're going to take a look at some of the candidates that have been coming up. And we'll go into some of the other searches as well. And you can see as I click through the chart, you're going to see, we'll go to the daily chart, that a lot of these stocks have been laggards. That's a laggard. Look at how far it is off the high. Market making a new all-time high. This is what's at the top of the list. Penn, laggard. Why is this not on your list, Pete? My God, look at this stock. Beautiful long green candles closing on their high. Well, first of all, you got the 100-day moving average in the way. Second of all, this is a weak stock. This is not a strong stock. Look at that decline right there. At any moment, the bottom could drop back out of this stock and it could reverse very sharply. So I think that these stocks that are bouncing like this set up well for day trades, not for overnight swing trades. And also, on a stock like this, you would want to see a nice base that forms. Let's say that it comes up to the 100-day moving average, it backs off, and then boom, you get some nice green candles and big volume pushing through that 100-day moving average. Okay, that tells me that buyers are there, that these gains right in here have been preserved, and that now I can look for a longer term swing trade on this, but it's still too early. This is really only the first decent pop. So in here, you get this pop, get excited about it, nothing doing. Oh, here we go. This is a nice long green candle after earnings. Oh yeah, this is going to be the one. Gets to the 50-day. Not so fast. So you need to be very, very careful when you're trying to trade these. These laggards are good for day trading. They are not good for swing trading until they have been able to prove over time that these gains can hold and that this is a bona fide move, not simply a short covering move. When the laggards start to rally, there's a phrase for that on Wall Street. It's called the dogs are barking. That is typically a sign that the market rally is getting tired because there's a rotation into the laggards. All the other stocks are fairly priced. They may even be highly priced. So asset managers are looking for bargains. They come around and they start scooping up some of those laggards. When the laggards are the reason for the market advancing, you know that the rally is on its last leg. That's what I'm seeing as I click through this list. JMIA, look at that. Look at that dog. MVIS, another one. Just going to keep going down the list. Do you see what's leading the market rally today? Heavy buying, heavy volume stocks today that are through the prior day's high. This list should have lots of stocks that are up near their high, like Cisco. Missed the train on that one. That was a beautiful breakout here. Earnings there. Big bullish engulfing candle here. Beautiful entry. Won't chase it now. Cisco is not typically a stock that makes big moves. So I'm going to continue to click through here, and you can see how the vast majority of these stocks have been laggards. So tread cautiously. Know that the market's getting a little bit tired in here. We're going to float higher on low volume. These gains can easily be stripped away. If you're day trading, aha, getting a bearish hammer right in here. Getting that bearish 10P cross. Am I going to bite right now? No, not yet. I don't know that this is a buying climax. I suspect that it is. Red candle, red candle. This opening fails from this long green candle. And yes, then I'll be ready to try some short positions in here on the notion that the market will go down. We had Chinese stocks yesterday rally, and I'm going to take a look at a few of them. This is not this type of stock that you want to be out there bottom fishing on. This is a weak stock. This is Alibaba. That was a one-day bounce, and look at this. Starting to reverse. And you can see I've got my alert line drawn. When it pokes down below that line and we get that market rolling over, it is poised to fill in some of that gap right there. And the same thing would hold true for all the other Chinese stocks as well. When not particularly a Chinese stock, but it does get most of its revenues from Macau. You can see my alert line is drawn there. Not a particularly strong showing. Big gains yesterday, gap up, moved higher. That's nice, but that's what the market has done in the last hour and a half. That's what the stock has done. Nada, nothing. So watch for these stocks with relative weakness. Those will be your shorts off of a buying climax. Once the market comes in and it finds support, then you want to shift gears and look at stocks like BAC. That's all I've got for you today. Please leave your comments. Please subscribe to the YouTube channel. Turn on your notifications. I'm not doing videos every day. That way you won't come to the channel and be frustrated by not seeing a new video. You'll be notified. So uh, thank you. We'll see you tomorrow.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.